doing? So, hope everybody's having an awesome weekend. This is 50 pips rocking and rolling 20th 07 2014. I'm not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclaimers here on the website and everywhere else. Understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? As we're going into the week, I'm going to try and keep it short and simple, and basically what to keep an eye out for. In terms of the data flow, I mean, the most interesting days really are going to be Wednesday and Thursdays, right? And basically what we've got is on Wednesday, not only do we have Carney speaking and the MPC stuff out, but we also have the official cash rate out of New Zealand, so with the RBNZ rate statement, so that's definitely going to be interesting. And then on Thursday, we start in the overnight session with the trade balance out of New Zealand, and then we have all the PMI. So we got the China PMI, all the European PMIs, and so on. So retail sales out of the UK and so on. So it's going to be an interesting day. So those are really the two big, most important days in terms of volatility risk due to data flow. Okay. So what's going on? Let's take a look at a couple of charts. Basically futures, let's start with the futures. What's going on the ES? So the ES, we've kept on saying that, we discussed it in detail in the longer session last week, is that basically those 1949s were pivotal for Momo and flows, and that it still looked like we were holding a bid tone, and that we were clearly not too interested in trying to get aggressively long at highs, but that it did look that the market was still in play, still poised to slowly make its way up to that 2000 level, and we felt that if we don't take that out, it'd be healthy to see a healthy correction, but we might need to take that out before we got that healthy correction. So we'd be watching very closely. We'd be very interested in being patient to take tactical short opportunities intraday, but that we weren't going to be greedy because we still expected this to hold a bid tone. And again, we're really far stretched. Any kind of correction could still hit one of those moving averages. We got the 50, the 100, the 200 there, but clearly those lows are still holding. I mean, if you look at it on a shorter time frame, say something like an hour, there are plenty of interesting opportunities to get short. We have those highs coming in. $1977s, right? And what happens during we come up into here, we got aggressive selling ahead of it. 1 hour negative close here, bam, chance to take some out to the downside. We come back all the way back up. We take out these highs, fail again, nice. 1 hour negative close right here, chance to trade it to the short side. Another pop here, 1 hour negative close. So you see a lot of different interesting areas. I think you could have tried to be stubborn, but even if you just look at it this 1 hour, you had 1, 2, 3, bar 4, maybe 5 interesting places to take short to the downside. Not looking for aggressive moves, but clearly playing on that failure. But you see what's happened now. Even though we made new lows here, there's lower levels, and we've jacked it all the way right back up. So going into the week, same thing's going to apply. It's all about these highs, all about action here. Tactically may be interesting to looking for intraday shorts, tactical shorts around this level, but if we start to catch bids above this level, attract new buyers above these highs, it's not the kind of thing you want to stand in front of. Okay, now what's going on crude? A lot of people asking me questions about crude. There's not a lot I can really add to the chart. What we said was basically that our longer term outlook is still bullish for crude. We're still looking for new highs for the year. And what we said is here we had a nice confluence of levels, right? As we were coming back down, bar the geopolitical risk, we're coming right back here, and we had this 100 and this 200 DMAs here protecting the 50 back. And we said, once we're holding inside this zone and we start to hold, it's very high odds that we're going to try and take out these lows. And if you're looking to get long, we said we wouldn't be focused on the 100 level, psychological level. The 100 is interesting if it hasn't been touched for a long time. It's been violated so many times. The 100 is really not that important. What happens, we come all the way back down right into the 50 back of this move, Nice confluence with the 200-day, bam, buyers come in and they're jacking it right back up, and we've got daily closes above this 100. So as long as we get daily closes above this 100, expect this to try and rotate higher, expect this move to try and play out. Final target for this trigger here is 111. So what I'd be looking at going into the week is longs are looking for this to hold on a daily close early in the week to then try that rotation higher. The next big pivotal level, we've discussed this before, that should not be a surprise to long-time followers of the charts and the blogs. There's 105s, but clearly very nice confluence. Similar on gold, we highlighted that 50 back on gold with the 200 DMA. Also very nice buying opportunity, very nice support. What's going on euro and cable? So cable, really not a lot. Not a lot of people getting excited, but really not a lot is happening. So it's starting to fail at highs, right? But it's in a bit of a choppy market, so I wouldn't read too much into it. I'd wait to see what happens this week. So clearly chance to get short here, repeated failures at highs. Clearly guys trying to buy the breakout, not sitting too pretty. And right here, what we've been talking about was basically that the big pivotal level for us was, in terms of this choppy range, 171.70s and the 170.60s. And what we said is we really need to close outside these levels from a daily close perspective to see some very aggressive follow through, right? Similar to what we talked about euro, we said that when we're trading in such a choppy market, don't get chopped up when price breaks through a level. It's not so much the level per se, especially because these are levels that have been touched before. It's a daily close inside or outside these specific levels, right? So you see what's happened here. We pierced below that, but daily close is back above the 70-60s, right? So came back down, clipped some stops, but then buyers came right back in, bam, close right above. So clearly this is the level to watch on the week. So intraday, into the flows, that 171 is clearly key for Momo, but that's the big level from a closing perspective. So if we start to get daily closes below the 170.60s, then expect this to try and potentially continue to accelerate very quickly back down into the 169.90s, and only on the daily close below there, I'd say the outlook starts to turn very, very bearish. I exaggerate. The outlook starts to look for a bigger correction back into the 68s and lowers. But as long as we continue to hold from a daily close above the 170.60s, that might mean that we just have some unresolved business at those highs and we'll be rotating back up. So keep in mind, Carney speaking the MPC stuff out this week, but especially early in the week, it's all about how we close above or below here. And don't get fooled by, as we say, don't get fooled by velocity of move inside range. Any move inside this range can be very quick and very choppy, and it doesn't mean it's not tradable, but I would caution people on making really big aggressive trades just because we pierce below or pierce above. Just because we pierced above doesn't mean we're going to 173. Just because we pierced below doesn't mean we're going to 150, right? Again, as long as it's hold, the upside rotation is still in play. It would be healthy to see a correction. This is still in a very aggressive rotation to the upside, right? So we could easily get a much bigger correction and this still be bid. So we're still looking for this in terms of a cyclical perspective to continue to print 172s, 173s, but we may need to see a healthy retracement before we get that. But short term, it's all about those 170.60s. And what's going on euro? So euro, and again, as much as this might frustrate some people, it's much to do about nothing, right? So what does that mean? Not slightly exaggerated, but still, what we've been talking about is we said, we're inside this chop range, and don't get confused by velocity of move inside range as long as we move inside this level, right? It doesn't mean there aren't trading opportunities. It doesn't mean you can make money. It doesn't mean you can't lose money. But what it does mean is that unless we get a daily close above 137, or unless we get a daily close below 135, it's still in this whippy, choppy range, okay? And also we said, Are we going to deny that this is bearish and that pressure is on? Absolutely not, because as we said, as we've been discussing this, daily closes below these 153.70s, very high odds we're going to go down and try and take out those 150, go down into 135s and take them out. What happened? We took them out briefly. We got absolutely no follow through at all. Right? So also keep in mind, as we said on cable, it's not because we break below that this has to go to 120 and the world is ending, right? You want to get a daily close for continuation. Okay, that's the key. Now, also, I would caution people, because if you look at that daily, even on euro, despite the fact that that 135 is a key level, why do we say from a daily close? Because you see below, right here, let me just highlight this, you have a lot of supports further down, 134.75s, this whole area caught a lot of bids in the past, right? So if we get traction, there's no reason why we can't go and test those 133s, 132.90s. But, we talked about these 134.75s, and I'd really expect the daily close below the 35.00 to aggressively take a stab at those, and a daily close below that would be very bearish. But on an intraday basis, if we press below those 34.75s and then we close back above, that does not mean, that would not be an extremely bearish outlook. If we keep on getting presses below the 135s, can't get any traction, presses below the 34.75s, can't get any traction, sooner or later the shorts are going to cover and we'll see a pop back higher. So what does that mean in terms of a concrete outlook into the week is, again, this is a support zone, and unless we get a daily close below, it doesn't necessarily mean it's bearish. Daily close below, this could get very, very aggressively bearish, and that could be another 100, 150 pips to the downside, gaining traction. As long as we hold above this 135, do not be surprised to see this try to make its way right back up into those 135.75s, which is a big level where most likely shorts will be waiting, right, to short that, keep it back below the 36.00, and look, if should we get back there, well, that's the midpoint of the range, right? So that's going to be the pivotal level for either a move back down into 135.00s or move all the way right back down into the 137s, right? So right here, the bears have everything under control in brackets. They have the chance to smack this down and cause more pain to the downside, and they need to attract fresh selling at lows to get momentum early in the week, ideally even before that Wednesday, Thursday. I suspect most of the longer term bulls, unless we get a daily close below those levels, they're still going to say the outlook for a ramp back up is completely in place. So that's what I'd be saying going on to euro. Again, a lot of things could happen, and these trading conditions have been very, very choppy, and I think it's important, as we discussed in the live session last week. So if you haven't looked at it, you can keep, we discussed all these charts in a lot more detail. But these kind of choppy markets, summer chop markets, can be a bit confusing, and there's certain things to look for, certain tells to try and keep your eyes open for. And so I think it's important for junior traders to try and keep an eye on that. So again, if you haven't listened to last week's session, we did a live session, it's about 40 minutes, so there's a lot of stuff discussed. We discussed all these charts in detail. So again, guys, I hope you enjoyed the quick overview. Have an awesome rest of weekend. Have an awesome rest of Sunday wherever you may be. Some people it might be already over. And again, have an awesome one. Thanks for listening. See you guys on Twitter. Have an awesome one. Take care. Bye-bye.